You are now tuned in to the Property Management Show with your host, Alex Osanenko. We bring in the experts of today so you can be the master of tomorrow in all things property management. Whether it's getting more doors, running a profitable fee-based business, or by simply being the best property manager. So, grab a pen and paper because this episode is sure to be a good one. Thank you and enjoy the show.
Hey guys, welcome to another episode of the Property Management Show. It's an honor and privilege to have you all listening and sending your feedback for different speakers and interviews we have here. And today I have Doug Brien here with me to talk shop. Doug, how are you?
I'm great. How you doing today, Alex?
Wonderful, wonderful. Some people might be asking, who is Doug Brien? Well, if you don't know, let me do a quick introduction and we'll see. So first of all, Doug is a former Super Bowl NFL place kicker. He played on 49ers at Steve Young and that era. He also led Waypoint Homes, which is the company. And correct me if I'm wrong here, Doug. But
okay.
Waypoint Homes used to manage 17,000 single-family homes. Is that correct?
Yeah, we bought and managed 17,000 homes in 13 different markets around the U.S.
Got you. And so you led that company. Were you the president of that company? What is like? Give us a quick background story on this.
Yeah, so I have a business partner. His name's Colin Wheel. We founded Waypoint Homes together. So to me, I think the most important title is, founder, co-founder. We did that together. Ultimately, when we took the company public, I was the CEO.
Gotcha. So you started the company. See, I didn't know that. I thought you were invited to run the company somehow, but started the company. I know you personally, I've reading your bios, you personally have investment properties, but also most importantly, the reason why you and I are here and talking property management to property management entrepreneurs is you are the co-founder and CEO of Mynd.co, which is MYND, which is a venture-backed property management company. And look, for all of you guys that are listening, I'm looking at the Crunchbase profile, and let's just be right up there with public information. You raised $35.6 million over 4 rounds, and you're currently with about 2,500 units under management. Is that correct?
That's correct.
All right, sir. So I'm just curious. This is a significant. We see a lot of momentum in this industry. There's significant private equity as well as VC-backed money coming into the industry, backing a lot of companies, a lot of acquisitions, a lot of consolidation. Doug, what are you doing? What are your aspirations for Mynd? Where are you going with this company?
Yeah, look. So we ran Waypoint Homes, the company we just talked about, for 7.5 years, and I think at the core, my partner and I were real estate investors and entrepreneurs. Like, that's who we are. We went in to buying single family homes in 2009 because there was a tremendous investment opportunity. Along the way, we realized there was an opportunity to build some technology and systems and leverage data in a way to really scale that opportunity. We started out hiring third-party property management companies. That's not our background. It was not our part of our initial business plan. What we quickly realized was we just couldn't find property management companies that could perform at a high enough level to attract institutional capital and allow us to do the type of reporting that we needed to do to for our investors and just to kind of generally run the business. So we see a tremendous opportunity to build what I would call a 21st century property management platform that systemathes things, measures things. We have a saying, you can't improve something if you don't measure it. So very metrics driven. And then I think as you look across almost every industry, there's a really cool new saying that I've heard that data is the new oil. Used to countries nice. And companies with oil were just that was the most valuable asset. And I think people are just beginning to realize that is a truism in the real estate business, but specifically in property management. There's a lot of data at our fingertips, and I think companies that can figure out how to collect it and harness the power of that data can create a more profitable and simpler investment for people that want to own residential rental properties, which is, that's my business. So in some ways, I'm like trying to solve my own problem.
Sure. Sure. A lot of us entrepreneurs, that's how we stumble into the things we do. So I'm going to take a bit of a history lesson from you. So when you ran the Waypoint Homes, what were the major, maybe top 3 or top 2 performance gaps that you saw within the property management companies when you had to hire the third parties to manage your portfolios?
I would just say in general, visibility into metrics, data, reporting, right? Like, it's interesting now. I'm in the third party property business, and you kind of get a good sense of like what an individual investor wants in the way of like a financial package. It's very, very different from what institutional investors want. And, it's not just like the financial visibility into what's happening, but it's the operational data behind it to help explain it. And then taking that even one step further, the concept of real-time data, right? So one of the things that I've witnessed in this industry, it's what you typically see is the financial statement at the end of the month, which allows you to look at it and, kind of manage in the rear view mirror, like, oh, these things happened. Wow, I wish I would have known that. Gosh, that's too bad. That costs so much. Whereas with the system that we built at Waypoint, it was really about creating real-time visibility into what's happening. So as things happen in real time, you can make adjustments, corrections, focus on the right things. And that type of visibility is really, I think, necessary to raise the capital, and then secondarily, really crucial to be able to manage it well enough to generate the returns that you.
But that's for a larger portfolio which Waypoint represented. Now you're discovering the various needs of individual investors. So, I think Mynd plays in a very similar marketplace as a lot of our customers, as well as a lot of our listeners, is small to mid-size investor with single family fourplexes and maybe smaller apartment buildings. Is that correct?
Yep.
Okay. And then what do you see in expectations or in, I guess, performance gaps for this market from the industry as a whole right now? Does that make sense?
Yep. So, I think one good part of the business to highlight would be, vacancy, right? So, it was true at Waypoint. It's true for every investor that I've ever come across. Like, as soon as that notice to vacate comes out, it's like, antennas are up, right? Like, vacancy is coming. And so, how you react to and deal with vacancy is important. And one of the things that we learned at Waypoint, which we're, I would say, taking to the next level at Mynd, is the concept of a self-showing. So using smart locks to be able to generate codes that are good for a certain period of time that allow someone to, get out and see a property more easily. We used to find that the biggest fall off in conversion rates was when we tried to schedule an appointment with an agent. And when we moved to self showings and we're able to like screen somebody and give them a code, all of a sudden we got more eyeballs in on the units, and we're able to move things faster. So where we're really trying to take this at Mynd is kind of a recognition of meeting prospects where they are, and we want to create a seamless experience where someone can find an ad for a unit, literally go through the entire process of seeing the unit, filling out an application, putting down a deposit, signing the lease, all in a seamless mobile-enabled experience. And what that does, and what it's done for us, is allow us to lease units faster. I think attract a better tenant profile that has a higher FICO score, has more income, is in general going to perform.
And they're willing to self-serve. That shows something, right? That shows something in the attitude and how, with the potential future tenancy, when they're willing to self-serve, control their own life and destiny, so to speak, right? Than trying to work on somebody else's schedule.
So there's a little bit of a positive here that people don't really talk about.
There's a little bit of a positive here that people don't really talk about.
Yeah, I mean, it's really, to me, it's fascinating. I mean, one of our philosophies is meet people where they are. So we're not trying to force feed self showings down everybody's throat. We actually offer both. It's like if you want someone to meet you, take this path and we'll set up an appointment. Someone can meet you. But if you want to see someone right away or see a unit right away, we have a really easy way for you to do it. And there's some interesting data on this. Progress Residential was a company that was one of our competitors in the single family space, and I think they've done a nice job of continuing to further their leasing efforts, and that they're set up the same way. So people can do a self showing, people can meet an agent, and they said over 90% of the prospects choose a self showing, and self showings actually has a higher close rate than when they meet a person. And so, I'm seeing here, I'm seeing more data and anecdotally seeing more feedback that having the ability to do a self showing, which is not commonplace in the industry, is a way to reduce vacancy and attract better
But it's
tenants.
becoming so, right, Doug? It's becoming so. There's at least like 3 companies I can name, from Tenant Turner to, at least 2 others that actually provide the remote lockboxes services to property management shops. So I think it's being recognized right now. But I think you're right. I think as an industry as a whole, they're apprehensive about the service. There are some things I see on the forums where there are occasional thefts happen, or somebody rents somebody else's property because of that. So there are issues with that are being resolved by some of these companies. But
Alex, I would say that to me, they're not real issues. Like I have these conversations every day, and you're absolutely right. Like there's some reticence and reluctance to try this, and security is the number one thing you hear. I mean, we had one incident in like tens of thousands of showings that went back to like someone with if you're going to steal something from a house or break in, you don't usually start that by giving, a copy of your driver's license before you get the code. Like just break a window and get in. And so, I think there are people that are always going to be, questioning change, fearful of change. But I think this is something that's, getting more and more efficient. And again, if you look at, meeting your future renters where they are and trying to create a better experience, this is something that people are interested in. I think in June we did like 38 leases, and all of them 100% were self showings. And people have a choice.
so let me shift gears a little bit, Doug. I have this iceberg report. It's an industry report. I believe in accuracy of its data because I've seen a lot of different. I've been doing this for over 10 years, and I've seen a lot of reports that were sort of similar in data, in numbers. And so the report really kind of focused on single family up to fourplex, and the findings were that there's about 22 million rentals of that size in the United States, and only about 30% are professionally managed versus the other 70% are self-managed by the investor or whatever. In Australia, it actually is the other way around, where most of the rentals, over 70%, are professionally managed. So I'm very curious. I mean, I think Mynd is sort of honing in on this and trying to solve that. But why do you think U.S. real estate investors want to self-manage? I mean, who wants to self-manage, and why?
I just recently saw that same data actually. I think you sent it over to the person that runs marketing for us, and I looked at a lot of data. I hadn't seen that before. I thought that was really fascinating. It almost makes me want to go to Australia and do a little research and see if I can figure out why, or how they're doing it differently. But I don't know the answer to it, but I have 2 suspicions. And like I said, at my core, I'm an investor myself, and I can just say like my experience trying to find good property management companies has been very difficult. That does not mean they're out there. There are good property management companies out there. I just think there's a lot of very mediocre and not very good ones. And for whatever reason, I had a hard time finding good ones. So look, I think if you have a bad experience with a property manager, sometimes they steal from you. Sometimes they have too much vacancy. They spend too much on repairs and maintenance. I mean, there's 100 things that can go wrong. Someone loses trust and they just come to the conclusion like, great asset class, if I'm going to do this, I got to do it myself.
Mm.
I also think that, there's a little bit of a cultural change happening right now with kind of millennials being the tip of the arrow, the tip of the spear in terms of change. And, I think in the past, there's just more of like a culture of do it yourself, especially in America. I don't know as much about in Australia, but I think that's changing. I think that the ubiquity of services and real estate has not been a market that historically focused on like the customer experience, right? So now you have companies that are trying to build services for all different types of real estate, and they're very, acutely focused on customer service. And I think, out of that's going to come some better service providers that hopefully can provide a service that, makes it so more people feel comfortable and trusting their, in many cases, their most prized asset to a management company that can actually, provide enough value and service that it pays for itself.
So I want to, yeah, Doug, I'm with you. I'm with you 100%. So I've went to Australia. I've met a lot of property managers. I did some speaking engagements there, and it's an amazing country. And I think a lot of the reasons why their curve is reversed, where a lot of properties are being professionally managed, is a property manager is a respectable profession that has that has been there for a while, right alongside real estate agent, but also they have pretty heavily regulated in terms of tenant. It's a very tenant friendly, and a lot of tenant protections are enacted in their legislated and their laws, and it's difficult for an individual owner to navigate those. Their rents are weekly. There's a whole bunch of other reasons, but I think a lot of it has to do with just how loose, or how tenant friendly Australia is versus U.S. traditionally has been focusing on the landlord and the property owner, sort of pushing property ownership through legislation and and benefits to the owners, not so much as tenants. This is changing now, so I think that's part of it. And I think the second part, you're right. I think, and my friend, I have a number of friends who invest in real estate, and it's been a topic for them. Like if they find a good property manager, they want to recommend. Like everybody starts signing up because it's very hard to find.
I hope you're enjoying this podcast. I wanted to take just 2 minutes of your time and say thank you to our sponsor, a company who makes this podcast a reality. That's 4.5, my company. We do marketing for property management companies. We've done it for the last 7 years, and the latest innovation we're introducing is guaranteed plans. That's right, we're able to guarantee the performance of our marketing and website services to you if you hire 4.5 to do both your marketing and the website. It all starts with a thorough business performance review where we really take a deep look into your business, SEO, business practices, your identify current gaps and areas of opportunity, and then figure out how to close them for you. Then we're going to guarantee a specific outcome in terms of results. And if that aligns with your goals for the business, we can sign you up for this guarantee plan and deliver the results to you or work for free. If you have any, if you would take a further look at this, go to 4.5.com, hit pricing, and take a look at our guaranteed plans. Thank you. Let's get back to the show.
So what are your aspirations, Doug, for Mynd? I want to give us maybe a high level 2 years and sort of a 5-year goal. Just what are you trying to do with this company?
Yeah. So, I would say first and foremost, I think fundamentally we want to make investing in what we would call small residential rentals. So 50 units and smaller. That's the real universe we're focused on. It's 84% of all rentals. So it's big. There's almost 36 million units in that cohort. It's hard. Like everything we've been talking about, from finding a good manager if you can, or if you can't, you got to manage yourself. It's hard. At the end of the day, it's a financial investment. And if I own stocks or bonds or other types of assets like that, I can pull my phone out and I can get real-time data. I can, find lots of high caliber professional and service providers to help me, and I can get real-time data so I know exactly what's going on. And I think that all of these things are possible in our business. It's just that reality has not come to play yet. And so it's to make it more simple. Like, it's a pretty audacious goal. Like, this is a hard, complicated business. We want to make it simple. Simple is very hard. I think we also just want to create a more compelling investment platform. There's a stat, I think it's like 84% of all real estate investors own within a 60-mile radius of where they live. And I think, why people do that is pretty clear, because they feel like they have to be able to be there and check on their asset and see it and touch it. And, what bothers me about that is the chances that the radius within 60 miles of where someone lives, the chances that that's like actually the best place to invest is low. It's unlikely, right?
Yeah, for you're in Oakland, right?
I'm in Oakland. Like,
Yeah,
it doesn't always make sense to invest in Oakland. Sometimes it does, but sometimes it makes sense to invest in Kansas City or Dallas or Florida. And, at Waypoint, we had the benefit of, like, we had our own management company. We had our own technology platform and software. So, like, I could look at the operating results and financial results in a very clear, consistent format, no matter what the market was. I could pull down all kinds of data that told me, something was doing well or it wasn't. And for me, like, I would love to personally be able to, like, look at lots of data, maybe have like a trusted partner that, gave me some advice in terms of a portfolio of real estate that made sense for me, which should be diversified into different markets and maybe different, types of buildings.
I love the idea. So the idea is, the target is, the plan is to have an active investor who can trust in you with both recommendations, acquisition, management, and possibly disposition. I don't know if you guys play in all those arenas, but I bet that's part of the vision. Or
yeah, we want to be able to make it simple. So the more we can just, like, all the things that you need to do to be an investor, we have a national platform. We're in the most investable markets. We can't be everywhere, but, like, do the research. Where are the markets where it makes the most sense to invest? Have a presence in those markets. Give people choices to move assets around. I mean, who knows? Maybe when you get into fractional ownership, people can sell half of a building in one place and do it, own something else somewhere else. And to make it simple and to have, like, real-time access both through a mobile phone and on their computer to all the data and metrics that they need to, be reassured that their investment's performing.
Do you think you'll have enough capital to get there? I mean, given the velocity you have shown so far, obviously the VC community and your investors think you do. But I mean, you gotta have a lot of properties under management to finance this.
Yeah, so I'd say, look, we're fortunate to have I think a good track record in terms of, like, achieving some success at Waypoint. We only achieved that success because we built a great team. We've been fortunate to bring a number of those folks over with us to Mynd. We are going after, I think, a big market with a big challenge. It's, property management is a very big market. There's a lot of opportunity there. We have some great investors with, long-term goals and I think a belief in us. And yeah, we've been successful so far. I mean, at Waypoint, we raised a lot of money. We were buying every single house. So we raised, hundreds of millions of dollars of equity. So I think we have experience raising capital. So does that ever mean that it's a guarantee that you're going to be capitalized forever? No, you got to, like, every step of the way, you got to be successful and be making progress and making that case. But I think, we have enough conviction in what we're trying to do and have the team and the capital partners behind us to make the right decisions and make it happen.
Gotcha. So I've come across, I wouldn't say we're friends, but I've met Max, who's Nassenbaum, who's a founder of Castle. I don't know if you are tracking with or following other VC-backed property management companies. There are a couple.
We know Scott Lowe, his partner, he works with us now.
Oh, I got you. Yeah. So I think Vince told me that. I may have, by the way, I did meet your team. I went to your office, really nice office.
Oh, you
and
did?
Really sharp bunch of guys and gals you got there. That's pretty impressive. Pretty impressive. So I can vouch for that aspect. But in terms of, like, Castle, they ran out of money. I mean, what mistakes are you not going to repeat?
It's so funny you ask, because literally those guys came into our office. Like I heard one day and the next day they were sitting on a couch in our office saying,
Oh, wow.
you know, we believe in what we're doing. You know, I think I have a ton of respect for those guys, those entrepreneurs. I mean, they were young, right out of college, had an idea, tried to make it happen. I mean, they raised some money, they took it to 1,000 units. I think, and this isn't me saying this, I mean, this comes straight from Scott, is like, I think where they got it wrong was they didn't bring in enough subject matter expertise. So like people who really know property management and real estate, they were all kind of more technical. And they also didn't have any experienced entrepreneurs who had ever grown a company before. And because of that, they made some mistakes. And so I think those were two really big reasons. What they did and what we're doing, which is very hard, is building your own software and running the business. So, you know, you're prone to just have some mistakes. And so you got to make sure that those customer satisfaction levels are high, and you're on top of that and you're measuring that. And that was another area where they had a fall off. And, you know, we're highly focused on it and feel really lucky to have Scott on our team, because I think you always want to be paying attention to the marketplace and, you know, learning from your own failures and the failures of others to make sure that you don't repeat those mistakes. So really thankful to have Scott on our team.
That's really a smart acquisition for you guys, and good luck to him and you as well in that journey. But that sort of brings me to the next sort of part of this next topic is what I see different from you. From Castle never really put any kind of emphasis on acquisitions and sort of putting a local expertise led team backed by the tech, backed by the best technology in the business, integrated with the mothership, so to speak, but have that local expertise level to service and drive the customer satisfaction. Now you have a little bit different approach. Spoke with Vince on your team, who's sort of in charge and looking through acquisitions, if I'm not mistaken. And you guys are buying some companies. So talk to me about that strategy. What are you looking for when you buy a company?
Yeah, so, you know, I mean, I think, again, this is another example of where our experience at Waypoint has really, really been helpful. Like, you know, this business it's about boots on the ground. It's about being local, having really good, talented people in the market executing the business. Now, I think you can make those people a lot more efficient with technology and data, and that's kind of where the Oakland office and what we're building comes into play. But our go-to-market strategy is something we call land and expand, right? So it's very hard to grow a property management business when you're just starting. You know, you're having a conversation with an owner, and it's like, yeah, we manage 4 units. Do you want to be our 5th, 6th, and 7th? It's like, no, thanks, I'll wait. Yeah. And the reality is, like, you need to have that experience to do a good job. And so what we're doing is we're going in and, you know, not just like buying any company, we think of it more as a partnership. We want to land by finding the right entrepreneur with the right portfolio that kind of is a good fit for us, and then paying them for the value they've created, and then creating a partnership to go forward. So, you know, maybe it's the owner of the company, maybe it's a few members of their team. They become part of that Mind team. So, you know, now we have units under management in that market. People can see us leasing and, you know, activity around property management. And we actually have, you know, local market experts that know that market, that can use the Mind platform to grow. And, you know, I'm proud to say that we've bought 5 companies so far.
Nice.
And it really is a partnership. They've all looked a little bit differently. Like, we're very entrepreneurial in that way. We don't have like a cookie cutter formula, like this is how we do it, it's our way or the highway. It's like, hey, we really like you and we like the portfolio you've built. Like, what are your goals? Like, how do you want to grow? Do you want to stay involved in the business? If so, what do you like to do? So we have owners who have stayed on as what we call ambassadors. And, you know, they're tired of the day-to-day property management. They just want to like help us grow the company and be that local ambassador for Mind. We have others who say, I love property management, I just don't have the platform to grow. I want to join forces with Mind and, you know, run the business and grow. And so that's the land piece. And then the expand piece is really, having a strong local digital footprint, turning on a variety of different online and offline channels to create, direct and indirect growth. And, that's really where we invest in the marketing to grow from that base. We're not a roll up. We're not just trying to roll up companies
and then packaging them and sell them. You are the operator. You are the future, so to speak. You're building your own future. I get that 100%. I think I think that's attractive to a lot of people, because having built a business, you feel, you don't, a lot of times as an entrepreneur, you don't want to just, toss it to the highest bidder, right? It's not always that, although, money is important. I did review your acquisition strategies on the website, like about acquisitions and what you're looking for. They seem to be very flexible, very interesting. How you sort of model this out. Definitely seen, like, that's the first thing I was impressed by when I started looking into your company is that sort of flexibility, not that depth of understanding of, like, these guys must have property management background, because there's no way, like you said, a lot of people have, hey, here's our model. Like, you either fit that model or you don't, or instead you say, here's who we want. Now let's make it fit.
Yeah, and sort of like, here's our vision for what this can be. What's your vision? Like, do our visions align? If our visions don't align, it's like, nice to meet you, good luck, no harm, no foul, right? We're looking for people that are really, really aligned, and we want to win with them. So, we're not just saying, hey, here's some money for your portfolio, go away. We're saying, we do cash and stock. So we're, part of what we say is, hey, if you're going to join us, like, I want you to win with us. Like, we're going to give you can take some of the value from your company in stock. If you're going to work with us as an employee going forward, like, stock, every person in our company owns stock. So when we create a valuable company someday, everybody who worked hard along the way wins with us. And we want, our partners that we do business with in new markets to have that same benefit.
Yeah, I bet that sounds pretty good. Get a little bit of a share of Bay Area technology while getting a fair price for your business. So that sounds all pretty good. Now let's talk from a property management entrepreneur perspective, who's most of my listeners are, and what would I need to do? And we've covered this from, like, I've asked this question for multiple companies who are looking to acquire. I'm just curious, from your perspective, I'm a business owner of a property management company. I want to sell potentially to you or someone else in next 12 months. What do I need to do now to get the best outcome for me?
Yeah. So, look, I think everybody's got a different way of valuing companies, but I think one commonality is everyone's going to look at your revenue, right? Like, what's your recurring revenue generated from property management fees and leasing fees primarily. So, if you're trying to grow the value of the company, grow your revenue, grow your business. Now, I think most thoughtful companies will look into kind of what we would call, the seasoning of your contracts. Like, if a contract that's 1 month old or 2 months old is less valuable to us than one that's 1 or 2 years old, because it's probably just less settled and there's more work to kind of figure out the residents and the assets and the owners and such. So that's a super obvious one. I think another one for us, which, we see a lot of challenges in this issue, is just like really focus on minimizing the side deals. I think as people are looking to grow, they'll oftentimes find themselves in situations where they're trying to be everything to everyone, and, maybe changing the way the fees work, or, I'll come to you every single time. If I'm going to spend $1 on a repairs and maintenance thing, I'm going to come to you first, versus having like more of a consistent threshold. So I think the fewer corner cases and exceptions, the better. Like, as we go through some of these portfolios, like, I'll see spreadsheets like pages long of like all the different exceptions that, like, makes your head want to turn around. It's like, how do you step in as a manager and make sure that you're delivering on the expectations that were set by the original manager? It's like really, really hard. It creates a lot of noise. And then also just the contracts and the accounting, like, go through and do an audit of all your leases, your property management agreements with your owners, your accounting. If you can clean all that stuff up. I would even say, if you were to have like an accountant or some kind of a consultant come in and do it for you, and you're truly looking to sell, you're going to end up getting that's going to be a positive ROI investment for you because you're just going to have a cleaner business, which just gives someone more confidence in the business and they're going to be willing to pay more. I know we will. Like we want to see people who've been running like, clean, consistent, transparent businesses.
Gotcha. Yep. So that's good advice. I haven't heard this one yet. I've heard a lot of different things, or maybe something similar. But I think hiring a consultant to come in, and it'll have to be expensive, and just take an inventory of all your contracts, all your leases, organizing them all, will yield a positive ROI at acquisition. That's good. How far in advance would you do that?
I mean, look, when once you sign a letter of intent, like the next phase would be due diligence, and that's when you're going to be handing over all this material. So, I would want to get my head around like what the issues are that need to be fixed. So I would do it, 3 to 6 months before I'm thinking of selling. And, just to be clear, though, the reason I suggest a third party is because I think typically people are accustomed to looking at their own stuff.
Right. 100%.
Like,
yep.
It's hard for them to see what the issue is. You get an independent third party who's going to look at it like we would or some other company would. And I think you're going to get a better assessment of, what are the things you need to clean up.
And what would you go looking for that person, Doug? Do you have a good, what would you go, you wouldn't go on Fiverr and pay him $5 to do it, but you also don't want to pay, Accenture or somebody else to do it.
Yeah. You know what? Like I would go find, frankly, I did this at Waypoint. I would go find someone who does like more institutional property management. Like say someone who works for the Irvine company, they're a regional manager. They've been doing it for 20 years. I'd say, hey, can I get 10 or 15 or like so many hours for you in your spare time? And they can do it in an evening. They can do it on a weekend. Like this is what they do. They're like institutional professionals. Just like come in and take a look at this stuff for me. I'll pay you an hourly rate and you're going to get some good, honest feedback.
What would you pay him, Doug?
An hour?
50, 100, 250?
I would pay them. I think it depends what market, who they are.
General, what's the range?
I would pay $75 an hour.
Got it. Okay.
Something like that. Plus or minus.
That's a juicy piece of advice. So look through LinkedIn, find somebody employed in institutional property management, done it for a while at a regional manager level, and ask them for their time to go in and evaluate, right?
Yeah, here's another idea. I just thought of this. Look, if someone was thinking, I want to sell, they're listening to this and they go, oh, mine's a company that buys, like, we're not going to go through every lease, but like, if they sent us a sample of these various contracts just for us to like look at and give them some feedback, we're not going to go through audit every single one, but we can at least tell them like, hey, it's totally fine. It's good as it is, or you have a really big problem here, or anything in between, and at least kind of level set in terms of like, how much is involved with kind of cleaning up your books.
So send Doug a few contracts, right, Doug?
Yeah, send them directly to me.
Yeah, got it. That sounds good. So yeah, so potentially, so before you start selling, you can actually socialize some of the contracts with maybe people who are acquiring in the industry, and we know there's a lot of there's a few companies that are specifically focused on acquiring property management companies. So that's a good idea. Let's talk about pricing a little bit. I can't wait to get into this topic. This is personally very sort of very fascinating to me, and I think that's the ultimate lever for controlling demand versus profitability. And what do you think is fair? This is the question I have. This is good. Okay, all right. This is the question. As an investor to investor, what do you think is a fair price to pay for good property management?
Well, I think it depends on the market, right? Like every market's got like a different pricing construct. Like, even within the Bay Area, here in the East Bay, we charge a half month's rent for leasing. If you go down on the peninsula or San Jose, it's $500. If you go to San Diego, it's anywhere between, there is no leasing fee, and $500. If you go to, single family homes in Indianapolis, it's 1 month, right? So it's like, there's a percent, but then there's also at the end of the day, what's the absolute dollars involved because of the rent levels that I think drive it. I can tell you just philosophically right now, like we think there's huge opportunity around pricing. Part of why we're building our own software is we're essentially building a task management system, right? I mean, all property management it's a series of tasks that are created by residents, owners, and assets. And it's your job as a property manager to like resolve those tasks. And there's ways to organize the tasks and measure tasks such that you can get unique visibility that doesn't exist today in terms of like, what do things actually cost? Like, what does it cost me to lease a unit? What does it cost me on this type of a property in a location like this to collect rent or manage, residents? And so with that visibility, I think in the future, not today, we're not there yet, but we're going to be able to price in a way that offers investors more flexibility, maybe more ease, and still make sure that Mynd is a profitable company. Today, just to make it simple, our philosophy is in every market, we're just right down the middle. Like, we're not the most expensive, we're not the cheapest. It's just a very average price. The goal today is not to make price an obstacle.
So you don't compete on price until you have enough data to actually make it a meaningful, strategy.
That's right.
That's smart. I like that. I like that. Pricing service, Doug, is different. I mean, it's difficult. I have a service, and now we've onboarded an engineering team. We have a technology side, but majority of I still consider myself as a service company, technology enabled service company. People first. That's my mindset. It's very difficult to do that, and we do a lot in. We end up just measuring essentially the average time it takes for each individual task. So then once we have all these priced in terms of time, then we convert time into dollars, right? And that's how we package services, and we see where we can gain efficiencies. That's the only way we see to come up with pricing. Fair way. With property management, I would imagine it's the same, but market drives your pricing. Like, okay, if you, Doug, dig in Indianapolis, you find that it takes you as much time to manage a property as it is in Oakland, well, the rent's at, quarter of what Oakland rents are, and your fees are half. How are you going to combat that, man? I mean, you're going to have one side offset the other.
I think part of it is around, like, maybe we don't, I think our costs will come down over time with scale. Like, we believe property management can be a scale business where we can ultimately, do tasks, manage units for less at scale. And so, specifically with your example, maybe it doesn't make sense for us to go to Indianapolis yet. Maybe we can't deliver our service yet. But then I would also say, I do think that oftentimes the way people think about price is not the right way. It's like 4% versus 5%, right? They're like, oh, well, I should go with the 4%. It's cheaper. It's like, well, not necessarily. It's like, what does your bottom line look like? To me, the cheapest property management can become the most expensive.
Oh, yeah, you and I know that.
What can you do in terms of like achieving higher leases, leasing faster? I mean, one thing that we're really excited about is, doing some things a little bit differently. And I don't know anybody in the market who does short-term rentals and long-term rentals. So we're starting that right now. If we can come in and in the Bay Area, in certain markets, you can drive almost twice as much revenue in a year doing short-term rentals. Now, it's more operationally complex. There's different types of tasks, but when you have your own software system, you can enable that. Well, what's our service worth now, right? Like, for short-term management, you can charge 15 or 20%, and the investor still does great. So,
because they compare that to the hotel. I mean, I've heard a podcast. One of my customers, Andy Moore, he runs very successful vacation rental as well as long-term rental, and like the competition, people don't balk at $400 a night. It's
it depends. I mean, even some of our stuff here in good areas of the Bay Area. I mean, you can do $160, $175, up to $200 a night in certain seasons and maintain occupancy. It's like, our job is to look at people's assets and to figure out, like, how do we maximize the ROI on someone's assets? And, that's just one example of, trying to come up with a unique value proposition to drive more value to owners.
Gotcha. Can I get some advice from you for let's say, a property management entrepreneur who manages about 600 to 800 homes in a high growth mode? I want to get some ideas from you to help this entrepreneur continue their success and growth. Obviously, mine's not going to take all the business out there, right? There's plenty of opportunity for local businesses to thrive alongside. There's a huge market, as I said. We're capturing only 30% of it. It's ridiculous. We got to get better at this. But here's what I want to know. If you were that smaller operator with all that experience you have, where do you see the biggest marketing channel for your new owners to come in? Like, what would that be over the next few years? What would you invest in marketing side?
I mean, I don't know that I have like a magic answer in terms of like
Sure.
channel, but what I do know, and you alluded to it earlier, is like this is a word of mouth business. It's a trust and credibility business. If someone finds a good property manager, they're telling everybody they know. And if you know and trust somebody and they say, hey, XYZ property management company, they do a great job, you can trust them. Like, the sales cycle on that referral is going to be fast and easy, right? So to us, it's all about the customer experience. The other thing I was going to say too is just like, I'm a big believer in working smarter, not harder. And I think there's a technological revolution that's happening right now. And I think the property management companies that like look out at it and figure out how to ride that wave and to leverage technologies in a way that delivers a better experience to residents and owners, helps them make more money. This is an investment, right? People want to make more money. Figure out how to use that technology, drive customer service and word of mouth referrals, and those are the companies that are going to thrive in the next 5 to 10 years.
That's excellent observation, Doug. So you saying, am I correct in summarizing, you saying obsess about customer experience?
Yes.
With in every possible way?
Yeah, and just one example. I mean, when we get, like, this happens, like, no matter what, it's going to happen, right? You're sitting between tenants and owners, and in many cases, it's a zero-sum game, right? Someone's loss is the other's gain. So you are going to get negative comments on social media. When that happens, literally the next day, we're pulling together a SWAT team of everyone involved, get to the bottom of what happened, how do we resolve it and make this right for someone? And when we were wrong, like, admit we were wrong and respond online and be super proactive. Like, I think in today's world, if you're not on, your social media, your online reputation management like that, I think it's going to be really challenging.
So would you pay $199 a month to know exactly the outcome for every single customer interaction you had ongoing basis?
I feel like this is a trick question.
No, it's not.
Who do I pay $199 for that?
So no, that's it's not. It's just a service we offer. It's a reputation management, but the outcome of it is positive Google reviews. But I think the most important part of it is the consistent finger on the pulse of your customer experience. And a lot of our customers don't value that aspect of it.
Yeah.
But they go in after, it's like Google reviews. Well, yeah, that's definitely part of it. They don't value. I don't feel like we're able to really explain the value of consistent monitoring.
Yeah, you know what? I think it falls in the category of work smarter, not harder. You got to spend money to make money. I think what you guys are doing is really innovative. You're trying, for that small operator with 600 to 800 units, like, they don't have the budget to go hire a marketing team, right? Like, outsource it. Like, you guys are giving a small company the ability to have like a 21st century A game in terms of like marketing and brand management. And so, yeah, like, I would be trying to figure out how to partner and leverage, and you're going to have to spend some money, but guess what? Like, understand what the lifetime value of a new customer looks like, and all the referrals that come from that. It's valuable. It's how you survive and thrive as a property manager.
Now you're talking lifetime value, customer acquisition cost. Man, you and I can spend another hour talking. Fortunately, we're about 45-minute mark at this stage. Where are we at? I'm looking at the clock.
Actually, 55 minutes.
55 minutes. Well, we got to wrap this up. Maybe we'll have you again. But I do have this question for the audience. I didn't ask my favorite question. Do you still have another few minutes? I got to ask about
Yeah. I'm good.
your mindset as a football player versus the entrepreneur and business owner. I think we'll all get a lot out of that answer. But before I do that, the PM Grow Summit is coming. It's for the property management entrepreneur who is looking to grow. And in fact, this is so interesting. Doug mentioned the most important marketing channel over the next number of years is obsess about customer experience. Well, as it happens, independently, we chose the theme of the conference to be all about customer experience, improving your customer experience. And It has to do with both pre-sale, onboarding, and database marketing, database post-sale. So we are
do a panel, Alex. We should get together a panel and talk about that stuff, because I think it's important. And if the industry, I feel like all of us get negatively impacted by this negative stigma that the property management industry has. Kevin from Renter's Warehouse, we talk to those guys. It's we're trying to create a better industry. And I think if we can all get together and, share ideas and perspective about how to up the game of the industry, it's beneficial to everybody. It's going to help us get from what you were saying, a third today, get it up to half of all these units being professionally managed instead of just a third.
Love it, Doug. Love it. So you just basically, you just said what I was going to say anyway, and said it more eloquently. But if you guys want to hear Doug speak or be part of the panel with Kevin potentially or some others, you know what? We can build a little bit of a syndicate here. We might actually make some meaningful improvements, and those millions and millions of units can start going in the professional hands, and that whole thing is going to become better for everyone. Tenants, investors, and everybody around, right? And property managers. So
there you go.
If you guys want to hear Doug speak, send me an email, alex@4.5.com. I would really appreciate your feedback on this show, as well as if you want to hear Doug speak. And if you do, what topics? So that would be great. And Doug, I'm kind of presuming that you might be available on those dates. The summit we just locked the contract. It's April 17th through 19th. What do you have on your calendar?
Pretty far out there, so probably good.
You're not playing football anymore, so.
No more football.
All right, good stuff. So speaking of football, that last thing I really want to dig into this and understand this. And this has to do with mindset. So I did a little bit of digging on your history with NFL, and you were a kicker with 49ers, got the championship ring, but you overall looked like the field goal average was 68.8%, which is not great. Not bad, right? Not great. And then you went ahead and had successful career for another 8 years or so, where your kick averages were a lot higher. How did you overcome? How does your mind work through all the negativity that you must have gotten over that lower ratio? And how did you improve? That's really interesting to me. What'd you do here?
Well, just to share with your listeners, Alex is a nice guy, and he emailed me in advance and said, "Hey, do you mind if I ask about this question?" And I of course said yes, but I thought it was so funny because it reminded me of being in the property management business is exactly like being a place kicker, right? So I played 12 years. I think when I retired, I was in the top 10 most accurate in NFL history. I think my overall average was almost 81%. But one of the things about being a kicker is no matter what good things you do, what always gets brought up is the one you missed.
100%.
And it's like property management. It's you might have saved someone tons of money on some repair, got a unit leased really fast at a higher than expected rent. But that screw up on that eviction is the thing you're always going to hear about. And so, what I learned as a kicker and what I still leverage today in the property management business is you got to just have thick skin and focus on the things that you can control. And you can't control people's opinions. They're going to think what they can think. But if you focus on the things that you can control and continue to do a better job, and as a kicker, it's the next kick, the next game, and you have to have that mentality where you brush off the mistakes and move on to the next kick and figure out how to work smarter and get better. And I think in the business world, it's the same thing. You as a property manager, you make a mistake, and maybe you're your client's not happy, a resident's not happy, whatever it is. It's like learn from the mistakes, own them, figure out how to get better, and move on and do better next time.
That's awesome. Thank you, Doug. Stay back after we finish. I want to ask you a couple more questions. Everyone else, thank you kindly for listening. We hope to see Doug and his company at the PM Growth Summit in next April. Also wish Doug the best. I mean, they're good people. Mind is doing things right. I love how, how open and sort of really focused the company is. And look, there's a lot of money behind it. People believe in it. So all the best to you guys.
Thank you, Alex. Really appreciate it. Thanks for having me.